Hey, it's Darren with Arbitrage Trade, and it is time for Deep Dive with our friend over in Singapore, Daniel. He's with us this week. There he goes. Hey, nice background. It's a little different than what I've seen before. Are you in a different space, or what's going on there? It's
Yeah, I'm in Manila.
Manila. Great. Grab me some folders while you're there. Um, let's.
Hey, you
it's
gotta
a,
admit the Wi-Fi is pretty good right now though, huh?
So far, yeah, it absolutely is. Actually, the background looks better too. It's not just like a radiator or whatever it is, air conditioner that we saw by the window. I don't know,
My
but not bad,
bedroom.
not bad. So, so this, yeah, you really did it this week. Yeah, you get my blood pressure up early in the morning now because it's early here, it's late there. But you're throwing stuff at me left and right, and I don't have enough meds to deal with this. But it is short selling, and so what you want to do is break it down in an institutional way. I'm sure, which is why I'm here to offset some of that. Is you're going to tell me what is short selling? So just give us the generality of what short selling is.
Yeah, Darren, I think what makes us great in this podcast is our synergy of, the institution and retail to come together to create harm.
Synergy. Synergy. Oh, jeez.
Okay, all right.
Dysfunctional. It's dysfunctional. Go ahead.
It's a little arguing, but okay. So short selling is when a investor wants to bet on a stock going down. So what they do is they borrow shares from someone else, preferably at a higher price, let's say $50, and then they wait until the share price goes down to, let's say, $30, and then they buy those shares back in the market and return it to the original person they borrowed the shares from. So that means they profited $20 on the trade, where the person who held on to their shares, they lost $20 on that trade, assuming they were, to actually sell their shares, which they don't because they were loaned.
Right.
But
Right. And assuming that the shorter actually buys the shares too,
mhm.
which we'll get into a little bit here in a minute. But that
They
what's
don't.
supposed to
They
the
don't.
what's supposed to happen here is whoever they get it from, which could be, let's say, BlackRock comes in and buys. I mean, just as obviously, this is not for real, never happened before. But say they come in and they buy 20 million shares, of which maybe, and then they put them in ETFs, and then they sell the shares out of the ETFs and they short the ETFs. And then what I'm getting to is that location of these shares to actually find those shares that are legit shares instead of just a broker saying, "Yeah, here you go. You can have these shares, and here's a million, 2 million you can get from us to short." Um, and the word rehypothecation comes to mind, where a share gets borrowed out, the same share, maybe several hundred times, just to really slam a stock and go down. But we're not getting into that much detail. But that's one of the problems we've had as apes is what I would call predatory shorting. And that's a little different than just trying to keep a stock price down to where you think the value should be, or to go against, you'll get into this too, but and I'm just doing an overall here of why we're so enraged and throwing poo. Um, is it's it's to put a company out of business and bankrupt. That's the biggest issue we've had, especially American companies that have been around for 100 years. Just as an example, AMC, try to
Oh,
slam it into the
Darren,
ground,
talking his book, not biased
just
at
to
all.
s- just to slam it into the ground so that they don't have to pay for those shorts, the one you were talking about. So that company that got the $50 price point, and then they bought it for that, probably unlocated. And then at the $20 level, yeah, they could get 30 bucks out of that, but it's even better if they can get the full 50 by a company getting delisted and bankrupted, and then they don't only have to pay for those shorts, but they still get that $50 per share that they invest in it. So I mean, just on a large scale, that's probably the biggest thing in the last 3 years that we've had. The ape community has had an issue with, and we've done a lot of DD about it. Just as another note, right around 2021, when the craziness happened with GME, the I don't know if you remember, there was a congressional investigation about it, and that's when they brought old Kenny in, and they brought in Vlad from Robinhood, and they brought everybody in, and they had this big ordeal about it. Nothing really, honestly, happened from that. Um, the That's when they started to actually talk about Dodd Frank again, because Dodd Frank is where the SRO came from, the regulation about shorting. It's about a lot of other things, but it also talks about shorting. And so they started an investigation into the shorting process right around that time, a little bit after that happened, so that something like that wouldn't happen again. That could be systemic in its outcome to not only the American market, but just all the markets in general. So that started, and in 3 years, all they've come up with is a little tiny little fund in Canada called Anson Funds, I believe it is, and they find them, I don't know, 2 million or something like that. Um, and I think that was off of 20 million in profits all over it. But this Andrew Left. I mean, Andrew Left is the one. And I'm doing like a soliloquy here. I'm sorry, but Andrew Left is still being investigated right now for fraudulent practices. And what we're thinking as a community is that that could lead to other things, because if he gets in there and then they say, "Hey, look, if you give up this person, this person, this person, that we'll go lighter on you," by giving up the others. Do I think that'll really happen? I don't know. But anyway, this is all generated from short selling. And so I gave a lot more than just a general statement. I got into a little bit of details, but you've woke me up. The coffee did okay this morning, but it was more about you start talking about short selling again. So let's go to, I've kind of teased to what you're about to say here, but let's talk about why do people short, at least in what's supposed to happen with that.
Yeah, so, I would say kind of originally, shorting started as a hedge, really in the commodity and currency markets, right? You just want to position yourself long one way,
Right.
short the other to keep things neutral, really. It was
Right.
really just kind of a way of keeping your book flat, if you will.
Yeah.
And,
Yep.
still hedge funds to this day do that with, stocks. A lot of people, they'll hold the stock long, but then they'll normally do something synthetic with options to kind of hedge. But
Options is the
really,
big thing. Yes, options is definitely where you see the puts and calls. You can see them on
mhm,
both sides, and they'll weigh it one way. Like if they want a stock to go down, they'll weigh a lot more puts, but they'll still have the calls just in case something crazy happens. So I'm just throwing that in there. Go ahead.
um, but I over time, it's really become kind of primarily a speculation vehicle in the market. And as you were discussing before, these hedge funds, they take huge position shorting, go on the media circuit to get people behind their shorts. And what kind of the issue is that whether these short positions are valid or not, I won't comment on, but they think they're going to run every company into the ground. And that was the problem with the GameStop thing, is that they, I don't remember when they started shorting at, but let's say it was at $20, and they were still holding it when it was at $3, when they've made the majority of the profits, right? Like, it's very rare that a stock
Exactly.
goes to zero and gets delisted.
Yeah.
So,
Exactly.
part of the issue is when it comes to this, they get a little greedy and holier than thou and play God, and then it creates these
Wait, who am
issues.
I talking to? Is it? What are you saying? Wait, I mean, what did you flip here for a
Hey,
second?
man. Hey, 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 hey. I've never shorted a stock a day in my life. I've sold
That's
some puts to collect the premium, but that's it.
Sure, sure, sure. But, I mean, that's exactly what's happened to a lot of these and Andrew Left actually targeted, of course, GME, AMC, a lot of these stocks that retail investors got into, he and his buddies, and we'll find out if he gives up his buddies or not. But, I mean, the thing is,
I don't think they're in the
if you
mob, right? Like, he
if
probably
you
gets, like, time off his SEC
if
sign, so I'm not gonna give everyone up. He's not a soprano.
Hey, hey, give me some more shares or I'll break your leg. Uh, the problem is let's just say, and obviously this, I don't think this has ever happened to any one of the stocks that we follow, but let's just say that a retail might own 89% of the float, and all of a sudden, somehow, some way, these funds have 30% of the stock. So that means there's stocks out there that are oversold, rehypothecated. FTD is not really being taken care of. There's ways to be creative about that because they're supposed to return the shorts once they've taken care of their business. The
Mhm.
problem we have is like we talked about. I mean, just for an example, maybe a year ago, year and a half. I think they've gotten it down now, but Citadel had 65 uh, billion with a B in securities sold, bought, but not yet purchased. And that's where we go, okay, wait a minute. So they've got billions of dollars invested in stocks that they have not returned basically or bought. Um, so we try to put two plus two together and until there's more transparency, we don't know. We're just guessing, of course. But when you look at what we own, like as investors, retail investors versus what the big guys own, it's the math just doesn't math because it goes way over 100% of what the float is. So there's a lot, and that's only what's reported. Um, who knows with the dark pools and everything else, and the family offices and everything else, the others that are out there. Because if it's house odds, basically, of course, which that's what the stock market is anyway. But if they can just create out of thin air shares, which they can do, and naked shorts, you can go down and you can do puts. I mean, is it not possible, Daniel, for a BlackRock, just as an example, to put in 20,000 puts uh, at $5, and so the price gets driven down there magically on a Friday, and all of a sudden now they have those puts that are in the money, which they could exercise for shares. And if those shares have been bought up, the float's been bought up for a long time, and yet the brokers still give it out these shares, located or not, then can you not? And what I call it is a silo of shares you can just hold on to in your dark pools and use them as much as you want to move the markets up and down. Is that not a possibility? I mean, same thing with calls. You can move it up and exercise your calls and get shares that way. You can go down to puts and exercise those and get shares, right? Or you put into the market shares that conceivably are not real shares.
Yeah, I
It's
think
like
that'd be more of a market maker activity. So like
right.
Citadel, I don't think
Mhm.
BlackRock does market making, but I could be wrong. But
No,
I
no,
mean
no, no.
that's definitely what they do when it comes to like hedging their risk as a market maker, right? So if it's going too far one way and it creates too much risk on their book, they kind of pull it the other way to hedge their risk. You know, it's like the options expiry kind of situation, right? Whenever options expiry comes up, whatever the most prominent option is, it always pins itself to that price, and you never really see it move, right? So when it's like the triple witching, I believe it's like when the weekly, monthly, and like quarterly options all fall on the
Yep,
same date, you'll
yep,
see it like it just like for the 3 days going into that day, it just doesn't move because they have it pinned
right.
there because they're
Oh,
hedging
yeah.
their risk so that they don't lose money.
Right, right,
So
right.
you know,
It's always
there's a million ways that they kind of do it.
like spoofing and layering could possibly be a way, which is illegal. Uh, yeah, and I've seen that happen in level 2, if you will. It's funny
Oh, I
because
mean,
you'll see 10K,
J.P.
10K,
Morgan
10K,
has
10K just layered above and below, and as the price moves up to either the call or the put, or to the bid or ask, and as it gets towards that 10K spoof, that layer will move, so it doesn't get filled ever, and it just always moves with the price, which
I
again
mean,
is supposed to be
J.P.
illegal.
Morgan got in trouble for that like a year or two
Yeah,
ago for
yeah,
in
yeah,
the
yeah.
commodities market on
Yep,
silver or something, I think.
yep. Yep. If anybody really wants a really boring day, they can go in and look at the disciplinary actions that have been put out there by FINRA and all the different SIBO, everybody. You can see the disciplinary actions out there, but they always go after the little guy. It's crazy. Or they always go after
Mhm.
the ex-employee of. They're never currently the employee of. It's always the ex-employee of. Anyway, I think we've kind of gone off topic here, but I mean, I'm just saying that short selling in general, I think requires you to do some, we'll just say uh, uh, creative things, but it also requires, as you said,
Creative
it,
accounting.
yeah, you can't really blame it on the market makers though. You really can't, even if that's a real person anymore. It could just be the algorithm is now the market maker. But I mean, it's you can't blame it as long as it's being given. So
Yeah, yeah.
as long as the brokers like Robinhood, international brokers, as long as they say, yeah, we got shares, here you go, locate it or not,
Well,
here they go.
it's bigger than that, right? Because to for these hedge funds, institutions to really get the volume they need, they're borrowing from other large institutions, or
That's what I'm talking
they're
about. The
borrowing
BlackRock
from
Vanguard.
BlackRock
Yeah.
because they hold the ETFs, and when you own an ETF, you don't own the right to what they do with the shares or the voting
Yep.
privilege of the share.
Yeah.
So they can, what BlackRock backdoor deals have with, the prime book of Goldman Sachs and the Citadels and the point 72s.
Yep.
We don't have that kind of insider information.
We don't. We'll talk about that in a sec. The short sale rule that's coming up, along with the CAT program. We could probably do a whole thing about the CAT system, but um, the I've always called ETFs as a joke. Don't get mad at me, but ETF stands for extra tools for fraud, because it gives the it really gives
God,
a
you
lot
you
of.
you hate a consistent 8% annualized return, don't you, Darren?
No, no, no. What I think what happens though is these ETFs are created and they love the index funds, of course, but these are created to basically bring more quote shares in to a situation where you can play with it, because anytime that an ETF is quote shorted, whether individually or as a whole, you are creating a a bigger pool, if you will, because they will sell, and I've seen this, they will sell shares out of an ETF same day, buy them back the next morning, and just do that. So there's so many ways, and those don't get counted as shorting. So it never shows up in the short reports because it's not technically shorting that individual stock. So and we won't even get into the 3 times shorting stocks that they've created for single stocks within the last couple of years, which is absolutely ridiculous. I mean, that created a lot of shares that aren't there, um, in my opinion. Not a financial advisor. So yeah, I'm getting off on another rant, but this is your fault for bringing this subject up because it's really
Well,
been a big deal in
the
the last 3 years for us.
those ultra short things, aren't they all, they're all synthetic, right? So they're all options underlying, I believe? Because
Well,
that's the whole thing of you can't hold them long term because of
yeah,
the time decay.
They were created for a reason. I can tell you that, and the reason is to really go after these companies they want to die, in my opinion. So that's just it's not for a quick win; it's to bankrupt the company. So we'll because if you look at the ones that they created them for, I think probably have one for Tesla too. I mean, I'm sure there is one out there for that too. Um,
Oh, not my sweet, sweet Tesla. I think it's so BlackRock can make more fees on more products, but we'll agree to
yeah,
disagree on that one.
yeah. Well, I don't know. So there has been a world, if you will, uh, pushback on short selling lately. Um, you've got China that has tried to do that and has regulated it and not allowed it and suspended it. You have
That's
South
because their
Korea that's
stock market sucks right now.
well, sure, and they don't want it to go even further down. So you've got
Mhm.
them doing that. You've got India now starting to do it. The regulators starting to do it, and you have South Korea. Those are the 3 leaders right now that are trying, especially South Korea. South Korea's been on this for a bit, and they're about to institute a rule that can send you to prison for illegal short selling. Not short selling, but the illegal kind, which involves manipulation and other things that are not legal. And now our SEC put it worked with the Dodd-Frank. If you go into Dodd-Frank, look at SRO, they created a short sale rule, which always takes forever to actually be instituted, but it is now being instituted as of January 2025. So it'll be interesting to see what happens between now and then for the funds to get ready for that. And then after it's instituted, because there was a big fight back from a lot of these funds. They did not want that. They don't want transparency. They don't want people to know uh, kind of what's behind the scenes. And I don't even know how much we really will see transparency wise because the person digging has to have, you know, reason to dig, and maybe they don't
Mhm.
want to dig. They don't want to. They're scared to find out what might be behind the scenes. Um, but that's going to be instituted in January. So I think if there is any improvement and regulation on short selling, it would start in January, and they pretty much have what 4 more months to do as they will until then
Well,
to get
as
ready.
Warren Buffett said, shorting is un-American. I think they should
He
just ban it.
did. I was
I'm
talking
just
to him
kidding. I don't think they
yesterday.
should ban it. Oh
I
yeah,
know.
were you?
I was talking to him yesterday, and I said, "Hey, man, what do you think about this shorting?" And he said, "Yeah, it's just un-American." I agree with you, Darren. So it's that's where I get my sage advice from.
And then he just gave you eight shares of Berkshire Hathaway A class, and then
That's right.
he gave
Will
you
you
a
be
little
quiet
slap on
now?
the back and said, "Good luck,
Yeah,
Chuck." And then
that's right. And he also told me about the crypto. He said, "Man, don't do that either." We're just
that
old,
man's
old.
nuts. He knows nothing.
We're old OGs when it comes to that stuff, I guess. Geezers. We're geezers. Isn't that the right word? Get off my lawn. So, I mean, the last thing we'll bring up as far as people that have gone against it lately. Devin Nunes has been involved in that. Senator from is he Florida? Anyway, Devin Nunes is a senator, and he's involved in, or he's an ex-senator. Man, I don't know. I got to do my research, huh? But he was in Congress. I'll say that, and now he is working with DJT, I think, the Trump media
Mm.
to try to find out about the short selling on that too, and how it has was predatory to that stock. So you get, and I've always said this: you don't really get real change until the 1%'s battling the 1%. That's when you start getting change and stuff. You get retail versus one.
God,
Okay, whatever.
we shoulda made sure that that Bill Ackman IPO happened, and then I guarantee you everyone I mean, other hedge funds would have shorted the crap out of it. And then you'd get a change. You
I've
gotta
always
love
wanted to
when
know who.
billionaires fight with their money.
I know. I always wonder because you can tell by shorts and puts, but usually they're all working together. When you see like who's got shorts and who's got puts, you can kind of see in a stock who's working together. But I always want to see like a big guy fight a big guy and see who's really going after making the price come down and who's really trying to make the price go up. And I think eventually that's what happens to really make a short squeeze happen. That somebody
Mhm.
decides, hey, we can really take advantage of how much they've got in this without hurting ourselves, because that's what it's about. You get all these funds that are invested in each other. I mean, you can look at the what is it, 13F forms or whatever it is, but you can see that all these different funds, ETFs, etc., they're all invested in by the same fund. So if it goes down, then it hurts a lot of the same people, the same funds. So it's always fun to see a 1% versus 1%. I don't know if we'll ever get to that point because it could be systemic, as Yellen would say. It's a systemic problem, therefore we can't we can't address it because that would be a national security issue if something happens to our stock market. So a whole nother conversation there. But let's wrap this puppy up. Like I said, it'll be fun to talk about it maybe in January, but it also might be fun to talk about it as we possibly hit this pullback. I mean, like today, the stock market is pulling back, but if we do get that 30%, obviously these funds are going to take advantage of short selling. They're going to make money off of it, and then, in my opinion, work together to drive the price down so that everybody wins. Um, anything you want to add there before we wrap this up?
No.
No. All right. Well, like you said, it's a strategy. It's a strategy, and I'm all for strategies as long as they're legal. Our problem is, or what I've always thought is the short and distort is a problem,
Yep.
and layering and spoofing is a problem. Having way too many shares out there created magically is a problem. Unlocated shares is a problem. Failure to delivers that never really get located, and that's a problem. So you throw all those into this pot, and that's why there's so much passion, if you will, from the apes on specifically short selling and naked shorts, etc. So I shall call this is my piece on the short selling. I've said my piece, and we'll see what happens the rest of the year.
And that's why we need blockchain technology in the markets to prevent things like this.
Of course,
Have
Bitcoin.
transparency.
Bitcoin output. Actually, you know what? I actually suggested that that would be a good benefit of the blockchain is to track from point A to point Z, and then everything in between would be tracked. But the CAT system supposedly is supposed to help with that. So we'll see about that. Maybe in the future we'll talk about the CAT system and kind of dig into that. So
I don't know who will blow their brain out first, me writing that or the listener.
yeah, that's true. It's not the most exciting stuff, right?
And this boring subject.
Yeah. It'd be what is it, Ferris Bueller? It'd be the teacher there. All right,
Bueller,
turn to page 3.
Bueller.
Yeah. Turn to page 4. All right. All right, Daniel. Hey, you're about to hit vacation, right? So I guess we won't see you next
I
week.
am.
Enjoy your time. Have fun. Stay safe. Arrive alive in 2 weeks, and we'll see you then, Daniel. I'll just call myself. See you then,
All
Daniel.
right, bye, Daniel. I mean Derek.
Bye, Darren.